The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 20th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dialing in right now is just fine. 877-927-6648. If you can't dial in, let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 92 points, 23,449. S&P's up 4, NASDAQ 100 back 3, Russell's up 3.5 points, 0.25%. Semis are on fire, up 1.25%, up 16 points. Spot volatility index down 8% so far, 8.5%, 95 cents. That's where we're going to go ahead and start the day for Maria inside the Tiger's Den. And she just simply asked if we could take a look at the VIX. And I posted a price of, what was it, $9.50. I said the VIX is headed to $9.50. Now, why would Steve-O say that? I would say it for the following reason. Right now, it all depends upon the end of the day, what the close is at the end of the day. But if the spot volatility index closes below 1062, right now we are at 1051, you will have a close below the 50-day exponential moving average. Just like carnage can appear in the S&P 500 when price is above that, especially as it's moving higher above that level, well, things can really take off to the upside when the spot volatility in the S&P 500 gets below the 50-day exponential moving average. Now, we might have another day where this continues to move lower. We've got a larger than minus 10% one-day rate of change. Will be the second in the last 3 or 4 sessions out there. Just another initiation move signal would be the read here. But the 950 came from taking a look at that lower Bollinger Band. Once price gets back inside the upper band, what you typically see occur is price go and explore the lower band. Now, I'm not using your typical default settings for the spot volatility index. One of the places where I don't use it because it's just not as good. We take a look at the last examples of when the VIX got below or tried to bust out of the top of the Bollinger Band back here November 5th, or September 5th. What happened? Price explored the bottom of the band. The most recent try was October 25th. What did price do? Went back and explored the bottom. Now, it can go below the bottom. I just simply use that as your target area out here. So what does this say? If you're thinking of going short, don't. Please do not. There's no signal here to go short. In fact, if you get it close below that 50-day exponential moving average, the signal is very clear. It is don't go short. Expect the S&P 500 to go higher. In fact, the S&P 500 at the end of the year is going to be higher than where we're trading right now, which is 2582 and change out there. So, Maria, that one is for you. The spot volatility index. Another question out here, what will the ES Mini do when it hits the perigee pivot point? Well, I sort of answered that question, I believe. But let's go take a look at it. The question is, if we take a look at the ES Mini, and I've got the perigee pivot point at 25.87 and a quarter out there. You've got 25.83. I thought I went back and did my math, my arithmetic on this, but 25.87, 25.83. I'll go with either. We're at 25.81 and 3 ticks right now, 75 cents out here. Looks to me, based on all of the other tools that we can take a look at out here, Mr. Z, is that the S&P is going to go higher. The ES Mini is going to go higher. You might say, well, what are those tools out there? And that would be a good question. Well, one of those tools would be, interestingly enough, is that we have brand new market profiles, daily market profiles. They have formed. They are now here to stay inside the ES Mini on a daily basis. And the key level to be watching there is going to be 25.90. We'll call it 25.90.50 or 25.90.75 out there. What price did last night after the Merkel-Jerkel ordeal out here was all price did was it went down and explored the bottom of its new TAS daily profile. Now, it found support. This box is slightly structured to the bullish side, but I'd have to call it more neutral. The cool thing is it's not a bearish structured box, such as the one that it just got out of. That one, the center of the box, was clearly closer to the top of the box. This time, not so much. So 25.90 is where the ES Mini is headed to. 25.90 and a few ticks out here. You get above that, well, then price is going to go higher. Now, why is it that price is going to go higher? Why is it that price is going to go ahead and take out the top of that new box? Because I think that is a good question. If you ask a good question, you're bound to get a good answer. Well, that good answer is coming from the Russell 2000. The Russell 2000 also formed a new box, and you had to love Friday's action out there because the Russell 2000 continued to push higher in the face of the Dow that was doing just the opposite. There is nothing better that you want to see, better, in a bull market than two guys leading the charge. And those two leading I don't know why the charts aren't updating, Mr. Z. They are definitely, guys in the production room just kind of confirmed that. Might need to reboot or something. I don't know. But at this stage of the game, the Russell 2000 is trading. This is supposed to be the weak link out here, right? Not so fast. In fact, the strength inside this market is coming from the messages inside the Russell 2000. So the one indice that you want out in front is in fact doing its magic. You talk about the magic of the VIX index. It's the magic of the Russell 2000. Now, price is got above that box. That box actually formed on Friday, closed above it. That's a beautiful thing. We're still above it. Price is headed higher. Where is price? Now, you also have a brand new market profile inside of the Dow, inside of the YM contract out there. So it needs to clear 23,469. Will it do it? Yes. Will it do it by Friday? I don't know. It doesn't matter. Probably not. Maybe it does. It's kind of a quiet period, a quiet week out here. Just getting ready to rumble to the upside. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were having a couple of technical difficulties, so we'll go ahead and leave this chart up here just for a moment. You want to, again, take notice of the new market profiles in the ES that formed today, the new one in the YM. If you look to the boxes in the lower right, you'll see top, center, and bottom, or it says top CTR, BOT, and you'll want to go ahead and write those numbers down. Inside the Russell, you will see that price on Friday as well as today is up above the top of the box. So what that then says is, hey, what's going on the upper scales? And on the upper scales, this is where this 25.94 area, 25.94.50 on the weekly. It's 25.90.60 on the daily. You've got a brand new box. Now, it's a bullish structured box, which says to me that price should go at least and explore the upper boundary line, the 25.95-ish area. If price closes over that, boy, that is mucho grande bullish out here, because you'd have a brand new profile and price will have ignored the rest stop and just simply gone higher. If we take a look, okay, I think we're okay. If we take a look at the Dow, also a brand new weekly profile. So an upper boundary level number to watch is going to be 23.557, but the Russell is the one that's going to make or should make the largest move out here, at least largest move right now, and that's headed to 15.18. So I would suggest to you not to be short the Russell 2000 out here. Actually, my suggestion would be not to be short any of the indices out there, but that's just my interpretation of the charts. You decide out here what the charts are communicating to you. One of those charts out here is going to be taking a look at that advanced decline oscillator reading for the New York Stock Exchange, the NASDAQ Composite, and the Dow somewhat. And if we take a look at the NYSE, it is now in bullish territory, meaning it is above zero. I do not know what the end of day reading is, but what we do know is that it came off that minus 150 level. It was like a trampoline. It's taken 2 days, in essence, or two trading sessions, or a few trading sessions to get back above zero. NASDAQ Composite finished above zero on Friday. It's extending that gain, even though price is somewhat flat. That just tells us that the underlying instruments are turning more bullish, not bearish. That is for for sure out here. And so all looks good. Does it matter that the New York Stock Exchange didn't hit a new high recently? The answer is no. It couldn't hit a new high recently. Price kept staying down where sellers were in control, down below the zero line. Well, whether it's today or it's tomorrow, and at this stage it's today, we've got to go with what we know at 121. Market breadth is strong enough to say, okay, it's now time for the buyers to see what they can do. Until the buyers lose control, you can't count them out, and you shouldn't count them out. Inside the S&P, we really covered that with regard to the volatility index, because once price closes below the 50-day, 1062 again is the number, price will just continue to run higher inside of the S&P 500. So you decide who's in control of these markets. Now, hey, who's in control of Goldilocks out there? It looks to me like a little bit out of control, but let's go take a look at it. Let's go figure out what we can observe and watch here. Now, the one thing that I think you and I just really ought to pay attention to is not the intraday charts out here, but just really the daily and the weekly. All of the gains plus have been erased from Friday. And price is now back. It did not like being outside of that daily box, which was a significant area of resistance. So at this stage of the game, Friday was a one-hit wonder out here. It looked like it should have been a breakout. No breakout. Now, what we don't know is it going to be a breakdown? And I don't know the answer to that. Neither do you. But if we see a close below 1269.60, boy, that will be the first indication that it is a nervous breakdown, prices to head lower. Where 1261.70, that's really the number to write down on your pad of paper. 1261.70 is the bottom of the weekly profile box, which is a bullish structured box, meaning the center, the cyan color, 1284, closer to 1261 than the 1317. If there is a close below the bottom of the box, the signal is clear. Paul Revere will be riding through Stevie's charts out here saying, sell, Mortimer, sell, because support will have broken. Hasn't broken just yet. We could just be in nothing more than this continuous sideways trading range out here, which quite frankly is more neutral than bullish or bearish out here. It doesn't give me an indication as to whether it wants to bust out the lows or not, but it looks to me like price wants to now go explore 1261.70, perhaps 1269.60. Looks like it is in the cards out there. Hey, back to the markets out here. Well, Steve-O, how can you possibly be so certain that price is going to go higher inside of the S&P 500? And I'd say that's an excellent question too. Actually, I don't have any certainty. Well, sort of I do. The certainty comes from the following, the signals. It's just the signals, ma'am. And we take a look at the signals. Well, that's the QQEW. I said the S&P 500. So that means we've got to go take a look at the Guggenheim S&P 500 ETF out there. That is RSP. And what we can see here is on, I think it was Thursday, it was certainly on Friday, the 17th. No, it was Friday. On Friday, price closed above the prior high. The prior high date inside the equal weighted. We're just looking at closing prices. It's a line chart out here, October the 20th. Has the S&P taken out its highs? No. Is that a divergence? Absolutely. What kind of divergence? That, my friends, is a bullish divergence. The equal weighted ETF leading the way, pointing the direction to where the SPYs are going to be. And what that means is the SPYs are going to take out their highs. Well, if the SPYs are going to take out their highs, likely so is the ES Mini, and there adds to the equation or the answer to the equation. Hey, what is the ES Mini going to do when it gets to that perigee pivot point? Even better yet, somebody might look at the activity of price today and say, oh, Steve-O, you've got to be careful out there because the Qs are taking a respite. They're not even higher as we speak right now. They're lower. That's got to be an indication that they are getting ready to signal a top. And I would say not so fast. And the reason is because of the QQEW, the equal weight, which busted through its all-time high many trading sessions ago. And it's an indication or should be an indication that prices inside the cues are also going to go higher. They're just simply curling up out here before they get ready to strike like a cobra to the upside. Let's go see. We've got a couple of questions that have come in. The first one is from Tom. Tom says, as soon as it populates, what are your thoughts about getting back into a long position of TVIX? Can't do it, Tom. Not a chance. No way. I know I asked you to wait until price got down to that 50-day exponential moving average, and it has out here. You could entertain it possibly, but that possibility would be, all right, if the VIX does hold 1062, and right now you're trading at 1055, then maybe. But, Tom, I don't think it's in your best interest. First of all, the rest of this week should be very low volatility. Very low volatility. So I don't see it. I don't see it this week. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 95. And to go back to Tom's question, because I don't want him thinking I'm just pulling something out of my you-know-what out there. Tom, this chart here shows what the percentage-wise, the average price movement of the, this is actually of the Dow. I don't have for the S&P, but let's just use the Dow at this stage here as, as an indicator as to what to potentially expect for the rest of this week. So these are the 4 days of this week for Thanksgiving: Monday, Tuesday, Wednesday, Friday out there. And this is since the March 2009 bottom. So the data points are from 2009 to 2016. Today, the Dow is up 0.4%. The S&P is up about 0.2%. The average Monday before Thanksgiving is that the Dow would be up a little over 0.1%. So it's outperforming today. If the VIX, spot volatility index, closes above its 50-day, then when I said, okay, maybe then you could go ahead and try it if you wanted to, because Tuesday would be the day during the Thanksgiving week that, at least since 2009, has historically been the day where you've seen the most selling in the marketplace. And, the down by about 0.2. Don't let these bars fool you. 0.1 and 0.2 are basically nothing, which is another reason why I said, you might just want to take that trade off of the table for the rest of the week. You might look at these bar charts and say, woo, looks like a lot. No, these are tenths of percentages out there. But if there were a time and you wanted to, watch for those tools out there. I'd also suggest if you had this, you'd want to wait to see some type of bearish crossover in a short-term chart, 60-minute, 1-hour time frame chart inside of the S&P 500. Right now, we have a bullish crossover that took place out here, and that's a bullish would be green line is above the red line. So you'd want to have things kind of in your favor. And as we speak at 132, Tom, they're just not in your favor out here. So you're excellent, extraordinary trader of these products out there. This is what I see right now that maybe you want to, as I like to say, something to think about. Now, let me go back to the question. I know there was another one that was in here from Phil. Phil says, curious on your tools view of the IBB here. Double bottom retest of a prior breakout level or not? So, Phil, let's go answer those questions out here. Let's go to our 3 different time frames out here. Let's put in IBB and see what it is Phil might be looking at. And we'll also go ahead and put it in on one of Stevie's, other charts out there. Let that be an example. Don't rush down a hamburger before you get ready to do a Radidio show. Now, if we take a look at, so this is kind of interesting, Phil, if you take a look at the IBB, I just went and took a look at a trend line that takes me back to November 2016. That was my first touch. This was already pre-drawn out there. May 31st is the next touch out here. And right now, what the IBB is doing, it broke through the trend line. So that's the first thing we know. Did it do with volume 1.2 million shares versus 2 million shares? Yeah, it did. It broke through with some conviction out there. So you're looking, is this a double bottom? Well, the double bottom means you were going against these swing points from August, which had August 18th and 21st, had about, used the higher volume, 937,000. That was tested with 2 million shares. Now, that's not a double bottom test that you like to see out here. So that's not necessarily looking good. Now, if the IBB proves us wrong, clear, get back over that rising trend line, right? They'll get back and say, I don't like this other side of this trend line, which would really mean it closed above the top of the box at 313.93. That's what I would be looking at there. If I look at my other daily chart for the IBB, well, what price did do is price did get down and, actually, we haven't seen the bullish reversal signal. Sorry. Close, but no cigar out here. I see price has been pushing lower with less relative energy. Actually, today, if it's really at 308.80, is that where the price is at? Yeah, it is. It's back below Stevie's red line just slightly, but not a good. Looks to me like it may want to push lower versus push higher based on taking a look at that. So thanks, Phil, for writing in, and I hope that assists you in whatever trade it is that you might do. Let's see. Test a rejected period, perhaps a new moon bottom. Just a comment in there. Okay, so I don't have any other questions that I see out here. What else do you want to take a look at? Somebody want the yen. Danny wanted to take a look at the yen. So let's go look at the yen for Danny. Let's go figure out what it is that we can see out here. Let's look at yen futures, Danny. I hope that's okay with you because then we have live active data. And if we take a look at the yen, you know what the yen did on Friday, Danny, was it made that, I think we said that, and if not, I apologize for not. It went ahead and made that the TD9 setup count. That means we've had 9 consecutive sessions where each session close was above the session 4 bars prior. That's really what that means. Now, the cool thing about those Tom DeMark 9 counts out here is they often can identify a change in trend or a short-term change in trend. My preference has been to see that number 9 bar trade into bars 5 and 6. That didn't happen on Friday. They did not trade into bars 5 and 6 out here. Whereas back here, this trading session, let me get a crosshair going. See, back on the trading session, July 7, that was bar number 9. But as we take a look and we go to the left, we can see price was trading inside of bar 6 out there. That's more of an indication of a market that wants to stall. Doesn't have to work out that way, but just more of an indication that it wants to stall. See this little 9 count out here on the trading day of September 21st? It did not trade within size bars 5 and 6, so you saw a little bit of a counter trend move, and then price continued moving lower. My suspicion is for the yen, Danny, yen futures, is that that's the type of pattern that we have. Price is going to pull back a little bit tired. We're going to see a test of probably Stevie's red line right around the 88.29 area. And if price is able to stay above that, then you should see a resumption move to the upside out here. If it breaks below that, it's really bad news for the yen. But the best indication of what it's doing right now is really taking a look at that Tom DeMark 9 count out there, which we saw took place on Friday. If I look, where else can I look for you? Oh, I could look here. We could go to this chart. We don't want to go to that chart. We want to do, I don't want to screw up with that chart. I'd like to, if I'm going to screw up anything, it would be this chart. So again, let's go to the December contract. Do I have it here? Yeah. For the yen. So I don't know what time frame it is that you're looking at, but 60-minute, that doesn't look bullish. Coming back into a swing point, okay. 240 minutes broken through profiles, that doesn't look bullish. The daily, well, we're still above it, so that's got 88.28 on there too. Kind of lines up with my red line out there. So, the weekly, brand new weekly bucks. Ooh, interesting. Very interesting, as Artie Johnson used to say. So here is where it found resistance. Pièce de résistance. This says 0.8840 or even 0.8758. Close above 0.8951 though, and the bulls would be back off to the races. Ain't no race at 1:38 in the afternoon. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's up 91, S&P 444 out there. No other questions that I can see inside the den or by email, steve@tfnn.com. So, and we've really covered, I think we've covered the overall bigger picture, certainly, of the markets, what to expect, what typically happens during a Thanksgiving week, or at least during this bull market run since March of 2009. So you know what to anticipate there. We've really covered the spot VIX index, where that thing is at, what it needs to do to get the advanced decline oscillator. I mean, it's not any more complicated. And there's no reason for us to complicate things. The new market profiles, all those, the market profile breadth out there, all these are just simply great tools to assist you in trying to decide general market-wise what is it that you want to do or what the message of the markets are. It's not the end of the week, or the end of the month, I should say. It's certainly not the end of the week either. It's just the beginning of the week out there. Gosh darn. But if we take a look at, and the end of the month is on Monday, right? But if you take a look at what's gone on so far in the month of November, you can see we're flat. Flat, meaning you got a nice little doji candle inside. This is the Dow that we're taking a look at. So it opened right around 23,444, 448, somewhere right around there. And that's where we are trading right now. So if it were to end as a doji, does that matter? Does that mean it's curtains? Does that mean it's all over? No, not at all. In fact, if anything, it's just kind of doing what it normally might do during this bull market for a month of November. And, it's just getting ready to move to the upside. Some people like to use those dojis as a halfway point in the move. So if that's the case out there and you're bearish, well, then, you're only halfway to the upside. I don't use it for that. At all. It just means the market's tired, recharging, something along those lines. We've seen plenty of doji candles inside of the Dow. Let's look at a couple of the other indices out here. I'm not really wasting time, but let's go see what's going on inside the semis, because they were on fire here, probably been on fire, so we'll stay on fire. Yeah, look at that. Nothing bearish as we take a look at the semis out here. They're up at the high of their not all-time high. I take that back, but certainly the high of their month, the high of their trading session. What's going on inside the Russell 2000? For those that think that it's weak, we already discussed that it's not weak out here. And if you look at the monthly chart, no big deal. Hasn't really done a whole lot of movement. So we've got the levels to be looking at inside those new profiles, both daily and weekly, for the old Russell 2000. I'm waiting. A question, can we take a look at ZTS? I am long. So let's go take a look at ZTS. Let's first go figure out what ZTS is. And in ZTS is Zotis Inc. You're long. Good for you. Good for you being long this equity. Where is it headed to? Hasn't been around but since 2013, but you've got the A to B equals CD on the longer term time frame chart out here. As far as where it is headed to, it's headed to 72.39 next. Then beyond that, I'd be looking at 81.81 out there sat. So that's what I see with regard to that equity. One more quick check of the map out here, and that's the other chart. And I don't see anything bad about this. So not sure where you're in long, but it looks like a fine set of charts. Prices are above daily, weekly, monthly profiles out there, and you've got the A to B equals CD to the upside. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve. I'm very well, thank you. Good upcoming holiday weekend to you.
Thank you. Thank you. Back at you on that one.
Appreciate that. Talk to me about timing, sir. You and I have talked for years, and you and I both know this week has some relevance timing-wise. What do you think?
Could. Well, I will tell you what I think is that the market gave us great timing signals last week. Timing signals that I can't ignore. And when I put those together, John, I guess with regard to this chart right here, this is the typical month of December. Forget about my headings here because I'm going to go ahead and use this for Tom's segment in about an hour. And if we take a look at since the March of 2009 bottom out here, December is historically, and maybe nobody needed a chart, but here we all learned visually. We've only had one bad December, and that was 2015. 2016, I know, has been our best percentage movement inside the Dow from the open of the beginning of December to the close of December out here. So we are in a very strong seasonal month out here. And the mere fact, John, that took place right at the time where it put in a nice big old bottom a few trading sessions ago. And what I mean by that, and I don't mean to groan and moan with you, but I just can't find that chart. It is this chart. It's actually a little bit more than this chart right here. But in essence, when the volatility index is such a cool tool, especially when you can find some of the secrets that are inside it. Some of those secrets that give us high probability trades out there. And so to me, the mere fact that we're coming into December when it should be kind of with regard to what's anticipated. By the way, November is kind of a crapshoot. In the last, since the March 2009 timeframe, those 8 years, 4 years have been up and 4 years have been down. So it's not anywhere near as steady as December's are. And then that being said, to have this nice little bottom that came in inside of the S&P on the trading day of November 15th, when we take a look at that spot volatility index, and while everybody was snoozing, what you and I were looking at is what was the spot trading at the close versus its 3-month counterpart out there. And that ratio has identified so many different bottoms that at least last for a short period of time, if not a significant period of time out here. So from a timing standpoint, I am well aware of November 24th. And I'll just keep watching it, and I'll just keep looking around. But at this stage here, I've got to go with what I see right now, and it says that the markets are going to move higher through the end of December.
Steve, thanks much for that review. Yes, and I'll just, as segue, just mention 3 dates and price levels on Armstrong's ECM model.
Yep.
October 1st, 2015 was a key turn. Turned out that was a good tradable low on the S&P.
Mm-hmm.
Then November 1st, 2016 was the next date on that model, and that was the low back at 2080 on the S&P. So I'm going to be watching to see, got to be very nice if we rally up into Wednesday, and then Friday actually make a new high, and then see if November 24th, the next date on that ECM model, proves to be an S&P turning point again, and this time a turning point high. But time will tell, so we'll watch. So thank you very much.
You bet. Thanks for sharing as well, John. Thanks for calling in, and happy Thanksgiving to you and everybody else that's out there as well. Dow's up 89, S&P's up 5 points. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Just going back to John, who was kind enough to share with us those dates from Martin Armstrong. And ECM stands for Economic Confidence Model. And for those of you not familiar with his work, you can certainly do a search on his name. There are several videos. He does audios with different interviewers, every couple of months out there. So worthwhile to listen to. If this chart here, which is the S&P 500, and what I've identified here on this chart, those two green arrows represent the two dates that John was kind enough to share with us. The first being October of 2014 and November of 2016 out here. And the next ECM Economic Confidence Model date is November 24th out here. Today's the 20th. So the likelihood is that it's going to identify a top in something. What John doesn't know, what I don't know, is it going to be a top of the S&P 500 or the Dow or something like that? Now, the cool thing is if you take a look at this, and let's say that economic confidence model date is referring to the stock market, because it could be something totally different. Could be currencies, could be an Asian stock market, or it could be anything out there. But the cool thing is that, let's say it is for the stock market, well, you'll see that these signals are really long-term in nature. So we'll have plenty of other patterns and tools that will confirm for us that, okay, it may have in fact been the stock market. And one of those tools for the Dow, as an example, could be the mere fact that it had that seventh wave move many sessions ago, 2, 4, 6, 8, 10 sessions ago, with price movement higher, doing less relative energy in a key reversal session. So I'm aware that that's out there. But if price, or when price takes that out, well, then look out to the upside. It'll just tell me no ECM date for the Dow or the S&P 500. Folks, stay tuned, because your favorite polar bear and mine, David White, he's up next. And then after that, you've got Tom O'Brien from 3 to 5. I'll do a quick segment with Tom at about 3:15, and then I'll be back with you tomorrow from 1 to 2. Steve Rhodes with TFNN. Have a great day, folks. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.